International student loans. You should always carefully evaluate how much money you will need to study in the USA. Then you will need to research and apply for scholarship, financial aid from your school, and find money from any other source, including family funds. After extracting these avenues, most international students still have a funding gap, and that's where international student loans come in. What is an international student loan? Federal student loans are popular with US students studying in the US, but they are not available to international students. Instead, international students are eligible for international student loans. International student loans are now a very realistic way to finance your education. In the US, loans are very flexible and can offer loan amounts high enough to pay for your entire education, but with extended repayment terms and reasonable interest rates, so you can afford the payment after your graduate. Cosigners. Most international students applying for loans must have a US consider in order to apply. A cosigner is legally obligated to repay the loans if the borrower fails to pay. The cosigners must be permanent US residents with good credit who has lived in the US for the past 2 years. The cosigners is often a close friend or a relative who can assist in getting credit. Since most international students cannot receive credit on their own, if you are not able to find a cosigner, see if there are no cosigners loans available to you. Interest. Interest is the additional amount charged by a lender on top of the principal amount that has been borrowed. The interest rate is computed using a benchmark rate plus a margin, with the margin being contributed on the borrower or their co-signers. Prime interest rate. This benchmark is influenced by the federal funds rate, which is established by the US Federal Reserve. It serves as a basis for lending rates in the market. SOFR. The SOFR is an interest rate benchmark that is administered by the Federal Reserve Bank of New York. This benchmark is based on the transaction in the Treasury market where banks and university borrows are loans as a risk-free overnight of funding rates. SOFR includes data for a wide range of market participation, making it more transparent and representative of the prevailing market. It has been adopted as an alternative to the labor benchmarks, which has faced certain controversies in the past.